Most traders don't lose money because their strategy is bad. They lose money because they don't have a safety net. I've been there. I've lost thousands in days because I broke my own rules. Today, we're giving you the 3 non-negotiable rules that saved your account and will stop you from blowing yours.
Rule number 1. The one and done. Set a daily loss limit. For me, it's 2 losing trades or a specific dollar amount. The second you hit that limit, you close the charts. No revenge trading, no just one more setup to break even. The market will be there tomorrow. Your capital might not be if you stay.
Rule 2 is the 1% hard cap. Never, under any circumstances, risk more than 1% of your total account balance on a single trade. If you have a $10,000 account, you are risking $100. This sounds slow, but it means you have to lose 100 times in a row to go to zero. It takes the emotion out of the entry because no single trade can break you.
Rule 3. Respect the red folders. Stay out of the market 15 minutes before and after high-impact news. Slippage during these times can turn a 1% risk into a 5% loss in a heartbeat. Professional traders don't gamble on data releases. They wait for the dust to settle. These rules are simple, but following them is the hardest part of trading. If you're committed to protecting your capital this month, drop a 1% in the comments.